Mr. Sanyal, taking up from what Siddharth said, we spoke initially about inflation being one of the concerns going ahead, but there are good signs there as well. You know, we've already seen in July a slight decline in inflation numbers, and going ahead, given the steps the RBI has taken, that might have its own effect. Do you therefore believe, when you say that the next few quarters will still be a struggle, as Siddharth points out, it could well be a recovery where certain sectors move faster than others? You know, you'll have a W-shaped recovery more than a V-shaped recovery. Do you agree with that, that there will be sectors, or do you believe inflation remains a big concern?
Well, inflation at the moment remains a big concern, but I agree with you, Rajdeep, that there is hopefully over the course of the next couple of quarters, we see inflation numbers coming down to some extent, because at this moment there is a very significant slowing down on demand on certain segments. So we might see some bit of softening on these numbers. But just going back slightly on your particular question on vis-a-vis some of the other economies, how we are doing, I think the way I would be seeing it, and the best way of looking at it, is what is India's share in global GDP? Whether we are achieving our share in global GDP at the pre-pandemic level. That answer is still no. We are still lower than our own share in global GDP, what was in the pre-pandemic level, not by a huge margin, but still it's lower. So at this moment, as Dr. Garg clearly explained very nicely, that these 3 years overall growth momentum, I mean, it kind of we consolidated over these 3 years. If we put these 3 years together, going ahead, the big challenge will be on a relative basis, our share in global GDP has to grow higher and reach our pre-pandemic level, which is still not the case.
Dr. Garg, do you see any, are you willing to see the glass as half full? Because as I said, your first reaction to these numbers was that the glass was half empty.
See, I believe the inflation is actually a bigger worry. You saw the numbers today. The nominal growth is 26.7%. The real growth is 13.5%. This tells you that the inflation, underlying inflation, is 13.2%. Sometimes we are actually a little bit sedated by the consumer price number, inflation numbers, which don't represent the economy-wide inflation. The real inflation is this 13%. I entirely agree that with the global economy slowing down now, there would be much less pressure on exports. Exports will come down and domestic availability would increase, and that would bring the prices down in times to come. But that would hurt the growth as well. Our imports are not as flexible, where imports will go down substantially. And therefore, what I see, and this is also reflected in the RBI's projection for the second half, that there is a pain left for many times to come. In the second quarter, you will see a low growth of 4%. For an economy which is only at $3 trillion, 3% or a little bit more of the global GDP, as was being said rightly, and with 16–17% of the population, even if we grow by 7 or 8%, to an economy like China, which is 5 times more than that, if it grows by 4%, they add 2 times or 2.5 times of GDP of India in a year.
So we are nowhere near our 5 trillion goal at the moment, and that, in a sense, suggests that the size of the economy is not growing as fast as you need to provide those kind of jobs, to provide the kind of momentum it needs. Siddharth Zarabi, is there a sense, you're talking to Finance Ministry officials, are they disappointed with these numbers? Are they, in a sense, is there cautious optimism? What is the mood in the Finance Ministry with these numbers?
I think very clearly optimism, because what the Mandarins are telling us that we are already growing faster than pre-pandemic. Now let's leave the semantics aside and let's focus on, Rajdeep, if you allow me, what will the impact of this number be? Because this number is behind us. We are already in the second quarter, and that will influence decision making in the remaining 6–7 months of the current financial year. The big takeaway is that if the RBI till some time ago was considering more aggressive rate hikes, I believe at the end of September, when the Monetary Policy Committee meets again, they will take comfort from inflation and the relatively robust economic data projection, which is, by the way, lower than what the RBI had said. And therefore, a 7 to 8% growth in this year, which started off with yet another black swan event of Ukraine and its consequences, will be significant. And the very last point, to the inflation rosy scenario, which I myself am talking about, I would give the flip side of the argument that the government has kept petrol and diesel prices administered and they have not moved for many months now. If that were to be passed on, then we will see the inflation dynamic changing, but I suspect that will not happen. So I would say it is better news than what we were expecting a year back.